Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so we are doing this live. Let me unmute. Alright, guys, so I am recording. So we are going to get started looking at the charts. We're going to start with the traditional markets, and then obviously we're going to get into crypto because there is a lot happening. But quickly, we're going to go through what's going on in the traditional markets. We won't spend that much time. Looking at the dollar, again, following the path as expected so far, but not much has happened since, well, it is Friday. It's the weekend, so we only had one more day past the last recap where I mapped this out. I am still looking for more downside in the dollar, but that does not mean we won't see some short-term upside going back to like 103.65, potentially even back towards like 104-ish, back towards this fair value gap, and then pretty much back towards this consolidation, and then breaking down again. Ultimately, we are looking still for that higher low in the dollar before we make another leg up, going towards the daily downtrend line and potentially breaking through that, getting towards a monthly bearish fair value gap. Now, there is a world where this is where it stops and it starts consolidating here, and this pretty much this general zone is where it makes a higher low. That's definitely a possibility. All I'm saying is it's very unlikely for it to immediately turn up going into next week and taking out these highs. I would expect a consolidation either up here or a continued retracement back towards the fair value gaps in this zone here, and then we could start looking for a higher low from these lows down here back in April 2023. All right, now let's take a quick look at the Dow, S&P, and NASDAQ. So again, still continuing higher as expected. We are looking for more upside. I am looking for it to get back towards this fair value gap up here, again coinciding with what the dollar's doing. If the dollar continues to weaken out, the US indexes should show some strength. So we are going to be looking for the Dow to have a move higher, going back up towards 34,000 to 34,400, and then we'll have to wait and see how the price action looks from there. Ultimately, I do see these circled wicks, these tops, being the general target in the short term, and then we'll see if it's just going to be a sweep of liquidity and then a breakdown, or we're going to have continuation. Again, we'll have to wait and see. Next is the S&P. Same thing, continued higher, did fill out this bearish fair value gap, which is very impressive. But what's it doing? Like we've been saying, attacking this pivot here, going after the buy side liquidity all throughout here, has yet to actually take it out. Got very close to tapping at it, but has yet to actually take it out. So just like with the Dow, I am looking for maybe another reach up to grab that liquidity, and then it'll come time to see, are we going to just sweep the liquidity and then break down, or will this be a continued move off of continued dollar weakness? And then there's also this bearish fair value gap right here that we are actually tapping into as of now. Next is the NASDAQ. So the NASDAQ, same thing, tapping into this fair value gap, but unlike the S&P and the Dow, this is showing more signs of a topping structure. Now, it's very, very early, very immature. It's just from the weakness that came in on the 7th of June, it has been very difficult for the NASDAQ to have that continuation, which is not that unexpected considering how powerful the move in tech has been. So it's not surprising to see there's a resting period coming for the NASDAQ, because a lot of these tech stocks are going through a resting period. Now, because it's a resting period, that does not mean it's a reversal period. We don't know that yet. It could easily just go into a resting period that ends up being bullish consolidations everywhere, namely bull flags or bullish pullbacks, and then have continuation higher, which would then lead for the NASDAQ breaking up higher. And if that were to happen, it'd go to the higher fair value gap here, or pretty much these high pivots, this imbalance over here that we have circled already. But if we are going to have, let's say, a stronger dollar, let's say Monday or Tuesday, then this actually might be where the NASDAQ kind of chills and we might trade back into the orange zone. But if we have dollar weakness early in the week, again, Monday or Tuesday, we have a nice pullback, then look for a move higher to really try and challenge these wicks. Now, it doesn't mean we're going to actually get up to there, but just to really threaten them so we could see another move going nearing 15,000. All right, now let's take a quick look at oil, and then we'll look at gold and silver, and then we will get into crypto. So oil, again, just continue to trade in this major support zone. Now, as we're trading here, I am starting to see potential for a bearish structure here that may lead to us getting back down to 62.50, but it's very early, it's not confirmed, so we can't jump the gun yet. But oil is showing in the short term here some weakness. However, if we continue to get the supply cuts, which I believe we will, or the export cuts, which I believe we probably will, it's going to be very hard for oil to have a decisive move down if Saudi Arabia just continuously cuts over and over and over its supply, because, well, demand will start to exceed supply. It will happen. Okay, so we're likely going to continue to just trade in here, and then as time goes on, we'll probably get the demand to eventually to the higher levels I've been calling, 85, 90, potentially even 100. And again, as we get into the summer and as we're getting closer into the end of the year, I do believe that we're going to see really, really strong moves in oil. Next is gold and silver. So this is consolidating in an area that is playing generally the path that we have mapped out from quite some time. I am looking for potential higher moves because the dollar is showing some weakness. So we do want to see some short-term strength in the gold chart. But if the dollar does, make that higher low or does a bullish consolidation of some sort, it will be short-lived, and it'll probably, like we have kind of mapped here, lead to a lower high, which will then lead to a breakdown coming to my ultimate zone that I'm looking for in the short term here, which is 1930-ish to about 1890. This is the area I see gold getting to. Even though we've gotten very close, I still see it getting there, and not much has changed. Obviously, we could see it just break right on out to the upside if the dollar were to, let's say, just break down. Again, that's a possibility, but that's not on the horizon right now. And if that were to happen, that would be coming off of the Fed, which, granted, the Fed will be talking fairly soon, so we want to keep our eye and ears open for that. Okay. Next is silver. So silver, strong day on Thursday, and then a pretty weak day on Friday. So it's been pretty impressive watching both gold and silver, especially gold. But silver's actually had some nice little minor rallies during gold's consolidation here. So it's been pretty nice to see that silver has somewhat of its own legs and currently trading at this bearish fair value gap. And this is exactly what I expected to see, just weakness. And if we're going to continue to consolidate with gold, I would look for continued consolidation with silver, pretty much like ping-ponging between these levels that will eventually lead to a breakdown, like I've been calling for, about 22.5 to essentially back towards 21 and then 21 and change. Okay. And now let's finally get into crypto. So we're going to start with Bitcoin real quick. We'll touch on the news. Now, we've gone through what I would say is close to a capitulation event. Now, it's not capitulation, at least not in my opinion. No one really knows. I don't think it's capitulation, but it is an event that has potentially led to that path coming. Okay, so essentially what happened, if you've been following the news, the SEC has been throwing out suits left and right. I don't think this is from Binance, and there's a couple reasons why. And I do want to talk on our positions gently for a bit here. But the reason why I don't think it's Binance per se is because if it was Binance exiting the markets, you would expect Binance Coin to be even more aggressively down than what it is, okay? We're talking like FTT levels, okay? Because if Binance is exiting the crypto market, we're talking it going to literally zero, probably last night. All right, that's what we would be expecting, and that's not what we're actually getting here. So if you've been following the news, like I mentioned, the SEC has been throwing its weight around, but the big thing that's really caused this issue, I would say for the most part, again, it's a bunch of stuff, but it's Robinhood. So Robinhood has been forced to sell. Now, it may seem like, well, they're only forced to sell 3 cryptos specifically because they're on the securities list that SEC put out, which is Solana, Cardano, and I believe Matic. Okay, so those 3 are the 3 that Robinhood holds nearly in totality almost $1 billion worth in all 3 of them. It's a couple $100 million in each, mostly in Cardano. So the forced selling, that's what's really toppling those 3 specifically. However, that's also caused a lot of institutional bodies to have to let go of a bunch of these positions, not just Matic, Cardano, Solana, etc. There's a whole slew of cryptos that the SEC has put on the list. So a lot of these institutional investors are going to have to, and bodies are going to have to let go of those positions, and that's exactly what's been happening. And also, you have to remember as well, everything is tied liquidity wise via Tether. So, when you have a massive dump coming in one part of the market, there's going to be a panic run towards Tether, and that leads to the snowball effect that we're seeing here. Now, I want to make it very clear. It's not that this can't go any lower. I don't think that's not. I think that's irresponsible to say. Of course, it could go lower. However, we don't want to get too far ahead of ourselves. We do have to see how the day closes. So far, we have stabilized, and Bitcoin, very interestingly, has held very well. Now, we're going to touch on the Bitcoin dominance chart and then the total chart and then total too. But just looking at Bitcoin's chart, as you can see, it's still in this descending consolidation. Okay, so it has not broken this consolidation yet. It may. We'll have to wait and see. It is still trading within this bullish fair value gap here, and it may end up holding this level if we do have a stabilization sometime tomorrow. Okay, so I don't expect anything happening on this daily candle, but if tomorrow, for whatever reason, does end up having a strong comeback or a nice strong base on pretty much the 4 hour of the daily, then we might actually see going into Sunday some strength until maybe futures open up. Okay, so we don't know how the dollar's going to open up. We don't know how the markets, the CME, is going to respond to this. There's going to be a massive CME gap, I'm sure, unless somehow Bitcoin ends up getting bought back up to those levels. And if you look at it, Bitcoin in totality has only dropped out 3%. Now we're going to touch on the Bitcoin dominance chart and to see exactly why this is happening. But again, it's very impressive that Bitcoin, Ethereum have pretty much held their general zones in spite of all this. And this is really just a runaway from the securities that had, well, I should say the alleged securities that the SEC has put out. And then also it's a runaway from cryptos that may end up being labeled securities, right? So everyone's trying to front run this. And again, that's another sign, in my opinion, of weakness. That's a sign of panic. And I've been taught, and that's what to buy panic, buy blood, buy the blood in the streets. You can't be afraid. And if you're wrong, you're wrong. But if you're right, and you're right most of the time in this scenario, it is extremely, extremely profitable. So, if you were on the Discord, I like all throughout the night I was buying a bunch of these positions, and this is a really good reminder of why I'm so against leverage when it comes to swing trading, because no one can predict capitulative events or any sort of major black swan events, but they're inevitable. So in my opinion, there's no point using leverage when you're trading this way, the way I do, because when you catch stuff like this, and on average, without leverage, you make enough money to make money and grow your account. So you don't really need it. And if you do use leverage, even if it's small leverage, you might survive a move like this. Like I know of a couple members who had a really bad time last night because they were over leveraged or just were in a good position where the leverage was too much. And then I have some members who used very little leverage and they survived this, but even so, it wasn't good because it was harder to participate. And that's the thing. This is an opportunity. This is an opportunity. So I try to beat that down into the members, into anyone who's interested in the way I trade, is that you want to see these moments as opportunities, because that's what they are. Okay, that's what they are. And leverage makes it really, really, really hard to jump on these opportunities. And these are the opportunities that change your account potentially. Okay? And also, if you're wrong and you don't use leverage, it's way easier to deal with. Okay, like you could survive it. If you use leverage, it's extremely difficult to survive these sort of scenarios, in my opinion. Okay, just my opinion. Again, everyone can trade the wrong way. I'm just sharing my opinion in that way. Okay, now let's touch on the Bitcoin dominance chart real quick, and I want to give you my opinion on what I think is probably going to happen with this. Now, this has been pretty interesting to watch. So as you can see, the daily broke above these levels here, and it's actually a monthly level. So let's go up to the monthly here real quick. So this consolidation here that we were in, we have begun to break out. Now, the reason why I'm warning you, don't get too quickly like, okay, we're flying up. I do think we're going to probably make our way up to the 55s, maybe even 56% dominance if this gets really bad. However, I am looking at this via the monthly. So what tends to happen in the monthly is, well, you have 30 days on average in a month. So you can trade back down on the daily in the monthly candle, and then by the end of the month be trading all the way up here. Okay, so I actually do see Bitcoin dominance breaking back down into like the 48 percentile area sometime this month, because alts, at least in my experience, going through crypto, when this stuff happens, what tends to follow, you have either a suckers rally or you have a squeeze, right? So suckers rally is getting people who think that, okay, we capitulated, they're buying in, and we're going to go to the moon, and then literally like a day or two later, it dumps even harder, or dumps about the same amount it did here, killing the longs again. Or you get a short squeeze because too many people have decided to short way too low and they're getting punished. Okay, so one or the other tends to happen, so that usually means upside, and in that situation with altcoins, that will likely lead to Bitcoin dominance dropping, but in my opinion it would be temporary. Okay, so I am looking for a trade back down into like the 48s. Could be like 48.2 or maybe even just 48 flat. But then watch by the end of the month, potentially, if we do have continued weakness in the alt market, for Bitcoin to break up higher, okay, for the Bitcoin dominance, okay? So I am on the side that we're going to see about 55, 56%, maybe even higher, but that would be the first zone, pretty much this whole imbalance right here. But I am also looking for there to be some short-term strength coming into the alt market, because that tends to happen. Okay, that tends to happen. And then I want to touch on total here, and this is another reason why total too. So we want to look at the market excluding Bitcoin, right? So it has Ethereum, it has all the altcoins, right? So we want to go on the daily real quick. So if you look at the monthly, yes, so monthly is showing you exactly like that. Does look like more downsides coming. But look where it's kind of trading here on the daily. Look what we just did. So we actually start tapping into these wicks here. And what tends to happen here is you're likely going to make a short-term move up, okay? Because you're going into what I would say is a clear downtrend again. But you want a short-term move up here on total, and then failing somewhere around this zone, and then continuation. So that would kind of coincide with a short-term weakening in Bitcoin dominance, while a short-term strengthening in total too, and then have a continuation of the trend for Bitcoin's dominance to grow and total to break down. Okay, so that's kind of my thinking right now, considering our position. So if you're in the swing trade service, like we're actually, it was a lot of work last night for me, because I was just like banging in and out of positions. We actually ended up closing a loser for the first time since Terra Luna, which was, I believe, TON. We ended up losing about 2% to 3% ish on that, on a 10% position. So it's tough. We broke the winning streak. We don't have a winning streak anymore. But again, it was necessary, and what saved us, and this is what saves me from being wrong. And I was wrong. I did not expect this to happen, and I will always admit when I'm wrong. I did not expect for us to have a liquidation event or some sort of capitulation event down here. I did think it would happen when Bitcoin started trading back towards 30. But it didn't happen here. It happened here, not there. What saved me from being wrong, and this is why I implore everyone to do this, is you start small and then work yourself big in positions. Because what ends up happening is your average entry for a lot of things gets put in such a better position than you were originally, that yes, you're in the red, but just a small retracement up can get you into a bearable place. Because TON, we were down, I want to say, probably 10 to 15% drawdown, and then we ended up closing just under 3%. It's like 2.88% because of those add-ons. Okay, that's the secret sauce of the trading. You add on at the liquidity levels, and we do it slowly, and that's what keeps us in the game. Okay, so even when we get losers, it's bearable, and then when we get winners, it's rewarding. Okay, because our positions are very, very good over the structure, over the actual structure we're trading. Okay, so hopefully that makes sense. And again, I am sorry to the members that had to deal with last night or missed the fun last night, if you want to call it fun. It was a tough time. But I do want everyone to also take this as a learning experience and know that I've been in your shoes. I've lost so much money over the years, forex, stocks, etc. And it's something where it's always painful, but it is always a learning experience, truly. And the answer, in my opinion, is actually quite simple when it comes to crypto. If you trade spot, okay, you trade 1x. You can still do a futures platform. I do this. Do 1x so you can long and short. What you'll find is your trading's a lot better, okay, because you don't have the pressures of leverage. And it may not seem like you feel pressures of leverage, but on days like today, technically last night, that's when you do, and it's really hard to function at a high level, at the level you need to do to function to get the best result possible. Okay. All right. So that is it for the recap. Again, guys, if you have any questions, you agree or disagree with what I've been saying, if you want to give me some, rail me, essentially, throw me some mean words in the comment section, feel free to do so. You'll find it down below. I'll make sure to read them. I am still bullish. I want to make this very clear. I am actually still bullish because Bitcoin's chart is still telling me to be so. Okay, I am not flipping bearish right now. I actually do see yesterday as being a massive buying opportunity, and I do think that we're going to probably see a pretty nice reversal in the short term, but then it will likely lead to continuation if the SEC and kind of the regulatory bodies kind of push the, kind of press down on us more, which I am starting to expect that will probably happen, unfortunately. But again, if you have any questions or you want to agree or disagree with me, leave a comment down below. If you have not joined the Discord, make sure to join the Discord. You'll find the link in the description below. And remember, guys, be patient, be vigilant, and be nimble. I love you guys. Take care. Goodbye.